Welcome back. You're with us here on Editors Roundtable. We have one of the largest fund managers in the country now joining us. Prashant Khemka is founder of Whiteoak Capital. Prashant, great to have you with us here on the program. Thank you very much for your time. Prashant, this side. How are things looking now, Prashant? Is there a bit of an earnings risk developing? I'm asking that in the context of the run-up that we've seen in the markets. Q1 earnings disappointed consensus expectations for the first time in many, many quarters. And we've seen some cut to FY23 and 24 earnings as well. How are things looking according to you?
Certainly. First of all, thank you, Prashant, for having me on the Roundtable show. I seem like I'm the one who's quite overdressed for Friday evening. Let's see, for the market, I think if you look at the backdrop, and I'm not saying it's necessarily entirely justified, but the optimism that you hear from across the spectrum, not just market men, not just investors, but corporates, large, mid-sized or small, pretty much across sectors, particularly the more domestic oriented, is quite unlike or the last time that I can recollect such optimism would be 2014-15 time frame, post the elections then, or prior to that, maybe 2007 time frame. So very few times I can recollect such high degree of optimism in the corporate world, be it large or mid or small, as I said. Now, how much of that actually turns out to be true remains to be seen. But if you go by with that backdrop, then, and if that backdrop is for real, if that optimism is for real, then very likely the actual corporate sales and earnings can turn out to be a lot stronger over the next year, 2 years or so, compared to what estimates are there.
Okay, Prashant, hi, welcome to our weekend show and thank you for joining us. It's great to hear that optimism has picked up, right? But we're also noticing that a lot of domestic consumption-facing companies are doing exceptionally well. It's return of the capital good laggards now. Private sector banks have picked up in a big way. Autos have come back in a huge way. Where do your sectoral preferences lie?
Hi, Sonia. So we, obviously, a lot of this gets priced in well before anyone realizes, right? So we don't necessarily have sectoral preferences based on what is currently showing strong strength in the real world, because very importantly, you have to look at where the valuations as well. But having said that, Sonia, consistent with what we've always had pretty much structurally, the team continues to find a lot of attractive opportunities in the private sector financial space. So that would be the area of largest exposure, followed by consumer in general. So it can be discretionary plus staples. I would say more so discretionary, which includes autos that you referred to. So consumer but beyond auto also quite a lot of retail and other segments of consumption. So consumer discretionary, consumer staples, also considerable exposure to IT services, though that is different from this domestic oriented sector. So we always like to have a good balance in the portfolio. And IT services obviously more export oriented, and it's not seeing the same strength. Or while the IT companies are seeing the strength right now, everyone is worried that they're going to see weakness because of the global slowdown and whatnot. But these three, I would say, are the largest sectorally segments represented in the portfolio. Besides that, we have fairly good exposure in, pharmaceuticals or healthcare in general, chemicals, and so on. So very well balanced.
Hi Prashant, this is Nimesh here. You briefly spoke about technology where, you have made a lot of money in the technology stocks, especially the mid-cap IT names in the last couple of years. But now, I guess in the last 6 odd months, it has been a bit of an underperformer for you. Broadly, what's your sense in the mid-cap IT names? Because valuations while the stock prices have corrected, the valuations have not corrected that much. So, are you getting a sense that from here on, the entire technology names should outperform, given that the number seems to be quite strong, and the commentary seems to be quite strong for most of the IT names so far?
Certainly. Certainly. Hi, Nimesh. So it's very difficult to say over the next 3, 6, 9 months. It's very possible if the US goes into recession that there would be some slowdown in demand, as 2/3 of the demand is for IT services companies coming from the US. But I think at this point, it is very well anticipated and more than baked into expectations for these IT companies. So it could very well be the case that they are actually reporting somewhat of a weakening trend in demand, and yet the stocks do well in face of that, just as the stocks have declined over the last 6 months without any material sign of slowdown in demand, right? Well ahead of the anticipated slowdown. It's possible 6 months down the line, they might be anticipating a recovery, assuming that 6 months down the line or 9 months down the line or 12 months down the line, we are indeed in a world which is seeing some kind of recessionary pressure. But at that time, it's possible that everyone, including these IT stocks, are reflecting an expected recovery. And so just as at the point of very strong demand, which is what we are over the last, say, 3 to 6 months, these stocks have done poorly. We can have 6 to 12 months down the line at a point where demand is weak, the stocks might be doing very well as they're anticipating a recovery down the line. So that's from a near-term perspective. But structurally,
right,
we still think that some of these mid-cap IT companies, which have very strong execution capabilities and are in the right areas of technology services, they can continue to multiply their value, cash flows, revenues, and whatnot over the cycle, and they're very attractively valued compared to any other segment of the market. From a valuation perspective, these IT services is the most compellingly valued when you look at from a cash flow perspective, as we do.
Okay. All right. Hi, Mr. Khemka. Nigel on this side. The sector for the last 1 week or 10 days or so has been these mid-sized banks. What's your take on it? Because if you look at the Nifty Bank, you'll say nothing much happened. But if you look at these tier 2 banks, well, they have had a party. Some part of the street believes that valuation argument, majority of the bad news is in the price. Would you be in that camp?
So yes, in the near to short term, near to medium term, the outlook from the cyclical perspective, if you were to believe what we started off talking about, a very upbeat corporate sector across from large to the smallest end, then the asset side problems, which already have considerably resolved themselves, but the asset side problems, to the extent they're still lingering in some of these mid or small banks, they would further be relieved, and the growth environment would be stronger for all of them as well. So it is possible that that's what is helping them catch up on the valuation differential that you can find on the surface for some of these names compared to the better run larger cap names, Nigel.
Okay, well, Prashant, we've run out of time, but it was really it was short, the chat, but it was very informative. Thank you so much for joining us on Editors Roundtable, and have a great weekend. With that, it's a wrap, but any weekend plans?
Just to add what Prashant said, while I don't know about his exposure into the private banks, the smaller private banks, but I can tell you he's taken a large exposure in one of the cement companies that you track very closely.
Okay.
So maybe it's a...
interesting one.
Okay, well, any weekend plans, guys?
Relax. Just go home and relax.
Sleep, relax.
I'm packing because I'm going to be heading to the mountains next week.
So there's a holiday, midweek holiday.
Absolutely.
So Nigel's making the most of that.
Most of it.
He's the youngest out of all of us.
Exactly.
Yes, right?
Yes.
Relax, sleep. Come on, guys. The movies, there are things to watch. Go out there, have fun. All right, you folks have fun too. It's a wrap on another episode of Editors Roundtable. Have a great weekend. We'll be back bright and early on Monday.